Do you guys know that there are ETFs that provide close to 15% annual returns every year? Just imagine watching your money grow by 15% every year without doing a single thing. And the more you invest in them, the more your money will grow. In this video, we will be sharing with you 3 such ETFs that have amazing growth track record. And the best thing is that these ETFs are currently down by 30% due to the global market situation. This means that you can buy them at a cheap price now and watch them grow even more in the coming years. Before starting, we will request you to please like and subscribe to our channel for more such content. The number one on our list today is Invesco QQQ ETF. This ETF has a ticker symbol of QQQ. It is currently trading at $263. If we look at the chart, it has fallen by 33% in 2022. It was trading at $401 during the year start and now it has dropped down to $263. But if we look at the 10-year returns, the numbers look good. It has a growth of 324% in the last 10 years. It has an expense ratio of 0.2%, which won't be a big hole to your pocket. It does pay quarterly dividends, but they are very small and we won't pay attention to the dividends as we are focusing on the growth aspect. It has assets worth of $151 billion. Now let's have a look at the top sectors and stocks this ETF invests in. In QQQ, the majority of the money is invested in the technology sector, which amounts close to 50%. This is followed by consumer and communication sector with close to 15% weightage. If we look at the top holdings in this ETF, the top spot is taken by Apple, which is around 15%. Then we have Microsoft, Amazon, Tesla, Alphabet, Nvidia, PepsiCo, etc. All of the top holdings are solid companies with strong financials. This ETF has invested in a total of 103 stocks. Now let's see how this ETF has performed in the past few years. This ETF has generated a 16.77% annual average return for the last 10-year period, which is amazing. Even the 5-year average annual return is 13.61%. So even though it has dropped down this year, it will surely spring back once the market becomes stable. The number 2 on our list of high growth ETF is Vanguard Growth ETF. Vanguard has the best collections of ETFs and VUG is the best among them for high growth. It is currently trading at $208. It has dropped by a huge margin of 34% since the year beginning. It was trading close to $320 in 2022 beginning and now it has dropped by more than $100. But looking at the 10-year growth in its market price, it is 206%. This is slightly less than QQQ, but it will help you save money in the expenses. As compared to QQQ's 0.2% expense ratio, this ETF has a measly expense ratio of 0.04%. It almost has zero fees. Similar to QQQ, this ETF also provides dividends, but the amount is very small and we will not focus on it. It has assets worth of $136 billion. Now let's take a look at how these assets are invested in various stocks. As VUG is a growth ETF, its primary focus is on the technology stock with a weightage of 41%. It is then followed by consumer and communication sector. It also trades in cash equivalents, but the amount is very small. The top companies VUG invest in is similar to QQQ with a top position in Apple, which has a 14% of the weightage, followed by the other tech giants. VUG invests in a total of 252 companies. Now let's take a look at the average annual growth this ETF has achieved. The last 10 years average annual growth of VUG is 13.5%, which means your money will have grown by 13.5% every year for the last 10 years. The 5-year average annual return is 11.26%. It has lower returns as compared to QQQ, but it also has a lower expense ratio, which is a plus point. The last ETF that we are going to talk about today is called iShares Russell 1000 Growth ETF. It has a ticker symbol of IWF and is currently trading at $210. Like its peers, this ETF has fallen by 30% in this year. Earlier it was trading close to $300 and now it has fallen to $210. And if we look at the 10-year growth, it has achieved a 234% growth in this period. It has an expense ratio of 0.18%, which is very close to QQQ. It has assets worth of $59 billion. Now let's see which sectors and companies this ETF has invested in. This ETF is more diversified as compared to the previous two. Technology is still the top sector, but the weightage is less than the previous two ETFs. It is then followed by consumer and healthcare sector. There is not much change in the top companies, they are all tech giants with Apple leading the front. The total number of holdings under IWF are 519. This number is double than that of VUG's holdings and 5 times that of QQQ's holdings. This proves that IWF is much more diversified. Now let's take a look at the past performance of this ETF. The 10-year average annual return is 14.47%, which is close to 15%. The 5-year average annual return is 12.37%. So these were the 3 ETFs that have high growth in the past and are currently trading at a very low price. Do understand that the 10-year average annual returns also include this year's huge drop. So the average growth will have been much higher than what we are seeing now. Thanks a lot for watching this video. Do like and subscribe to show your support. We'll keep making more videos on earning, saving and investing money. One stop to all your money problems. See you in the next video.